Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Sunday, January the 6th, 2013, and here is this week's Weekend Review brought to you by WallStreetTrading.com. Want to first start off by saying I hope you guys are enjoying your weekend so far. A lot of great action that took place in the market last week, and we're going to see how we are looking, how we are shaping up going into next week's trading, or I should say the following week's trading here, starting tomorrow. So let's go ahead and take a look to see how the indices traded and closed on a weekly basis. We had 4 trading days last week. We had the Nasdaq. Let me zoom in here. We had the Nasdaq up 2.72%. We had the Russell 2000 up 3.51%. The Dow Jones was up 2.53%. Taking a look at the S&P 500, it was up 2.82%. Crude oil was up 1.52%. GLD was down close to 1% here, closing down 0.98% for the week. Taking a look at some key sectors now, the Dow transports were up 4.28%. The XOI, the oil index, was up 2.92%. One of the strongest sectors that I'm tracking this week were the banks, up 4.78%, and volatility, the VIX, was down 23.25%. So definitely some interesting action to the top side across the markets here. I want to first start by taking a look at the monthly charts, the weeklies, the dailies. You guys know how we do these weekend reviews. If you have not had a chance to take a look at some of our previous weekend reviews or some of our previous videos, you can go check out WallStreetTrading.com. On the upper right-hand side, go to the My Wall Street TV tab. You can see all of our video archives. So far, it's been a very interesting Sunday for me so far. I actually just got finished coming from a meetup group up in the Fort Lauderdale area, and I'm sitting in a big room, with a whole bunch of older traders, probably say in their 50s and 60s, and I'm thinking to myself, you got these older traders looking to operate in the market and make money in this market, in this fast-moving market we got going on here, and you think about, how hard you got it. Think about how hard it is for somebody that's a little bit older than you, all right, or not, maybe a little bit. I'm not sure what your age is, but older than you, trying to participate in the markets and take a profit when trading against, people that are faster than them and computers. So, there's a market for everybody. Some people, that can't sit in front of the computer, they swing trade. Some people day trade, whatever the case may be. Just wanted to throw that out there. So definitely want to, you definitely want to make sure that what time frame you like to trade on, and who your competition is and what type of people are involved in the same market that you're in. In any case, just want to throw that in there. Let's take a look at the SPY monthly chart. You can see here, so far we're trading above this key 145 area that we had trouble breaking above back here in September and October. The longer we hold above this 145 area on the SPY, looks pretty good. You can see here down at the bottom of the chart, we had 2 consecutive high closes. It wasn't a big close higher, but still, you can see here we have 2 green dots. Whenever you have a green dot going forward, when you see my screen, that means you had a consecutive higher close. Okay, so that's what took place on the monthly. So far, this month is green. Let's take a look at the weekly chart of the SPY. Let me zoom this out a little bit here. All right, and taking a look at the weekly chart of the SPY, you can see here, nice little uptrend still intact. Let me see, I have all my drawings on here. No, I don't, but we have a nice little uptrend channel that's still intact. All right, and right now we're back above that key 137 level that was acting as acted as support back here when we try to do a little fake breakdown through that level there. Rallied back up, traded sideways, nice breakout bar, this past week here, and now we're looking to go back up above 147.25, up towards this back up towards this 148.19 level. So far, weekly chart, nice engulfing candlesticks. Now, this is a nice engulfing candlestick that just took out, basically just engulfed the previous 1, 2, 3, 4. You can even say 5 weeks of previous action. Nice expansion bar. We may chop around up here a bit, maybe come back and do some filling a little bit for the fact this is a nice little wide range expansion bar. And we definitely could still have some momentum. Just rock these markets high up towards that 148 level plus, but we'll have to wait and see how things shape up. Let's take a look at the SPY daily chart. SPY daily chart, nice little upward channel that we were tracking from back here in May. All right, we broke the little upward channel back here in October, sold off, had this nice little key inflection channel that we were working off of, got back inside the channel, tried to break above the channel right here. As you can see, fell back in the channel, came back down to our key level we have highlighted, that I had highlighted from this little gap right here. This little spread area. So I'm using that as a nice little support area. You can see from my little green shaded box here. Gap down. They bought that right back up. And guess what? We're back above this key inflection trend line from this channel that I've been showing you guys in the past couple of weekly and daily videos here. So gap, the low of the gap that we had from back here on, what day was this? I believe this was Wednesday. Yeah, Wednesday. The low of that gap is 144.73. We may come back down to that level to see how valid it is and, have some back and fill action, like I said. But if we can hold above this 144.72 area, 140.45, call it, we definitely could start cruising our way back up slowly towards this, towards this 148, 52-week high that we had back here. So we'll see how it shapes up. Everything is looking good, though. Again, we may have some little chop action, sideways consolidation up here to build a better base. Let's take a look at the triple Qs. All right, the Nasdaq. Let's start by taking a look at the monthly chart. Monthly chart for triple Qs holding above this key 64.80 level. Call it 65. All right, the longer we go hold above 65 looks good. You can see here we remain in that nice little upward channel. Okay, you can see now the Qs, they didn't have another consecutive higher close for the month, but you can see how the month we have been holding this 55 level for the past 1, 2, 3, 4, 5, 6 months now here. Okay, let's take a look at the weekly chart. Weekly chart, nice little base that most likely is going to try to build off of this 63.58 level. Nice expansion bar, engulfing candlestick that just engulfed the previous 1, 2, 3, 4, 5 weeks or so as well. And next level to watch on the Qs is going to be around this key 68 level. We get back above 68, we could see 70. We'll have to see how that plays out. We break below 63.56, we could go back down here towards 62. But I think we have a nice little base that's going to start trying to build to possibly form another little higher low, all right, for the year. Got to pay close attention to that right there. Let's take a look at the triple Qs daily chart here. As you guys know from my previous analysis that I showed you, all right, we are coming into some key resistance levels. Let me go ahead and get rid of this. Actually, let me just go ahead and hide it. All right, but we are coming into some key areas on the chart. All right, remember, we're back above. See, I got a lot of stuff on here. Give me 1 second. We are back above, again, above that key 65 level. As you guys recall, I mentioned the fact that we had this little shakeout here. We had this little shakeout here earlier this week on the Qs, or whether this was Monday. Well, last week we had the little shakeout here on the Qs below the 64.31 level. All right, and with all of last week's fiasco, we're back above this nice little range that we've been tracking. All right, and as long as we can hold above this 66 level, we can try to make a move back up towards the 67.38 and try to get back inside this little key range that I have highlighted as resistance. Why is that resistance? Well, if you take a look at this previous price action right here, you can see we had a lot of price action in this little range from the breakout to the to the move back higher to actually when we were holding below that 67.38 level, sellers came in. So that's a key level to watch, and you can see we nicked that level on Thursday and got rejected. Again, for the Qs, we may need some back and fill action. We do have a huge gap up right here, so we may try to come back and try to pull like a little higher low. That's going to give traders a little bit more, a little bit of a better entry with less risk on. So we'll see how that plays out. Again, those are your levels to watch. The top side above 67.38, we could start to chew right back to this little resistance band that I have right here. All right, and the level you want to work off for the gap is going to be down here around 65.50, 65.51 from the close. So that's how the Qs are looking. The IWM, which has been showing relative strength to the market the past couple weeks, and now you can see why it's showing relative strength to the market. If you take a look at the monthly chart, IWM is actually making all-time highs on the Russell 2000, and this is definitely, the market pushes up with momentum. This is definitely where you want to be taking a look at. Easiest way to play that is those leverage ETFs, TNA, which is 3 times long, the Russell 2000. And you can see here on the Russell 2000, we got two consecutive higher high closes from the prior months here. Let's see what happens this month. All right, level you want to watch. As long as we can hold above this 85 level, 84.50 or so, I think we'll be in good shape. And if we can get above this 86.76 level, which we are right now, and hold above it and start moving away from that level to the top side, that will be even better. All right. Let's take a look at the weekly chart. Nice expansion candle. Basically just took out the previous little highs that we had right here. Now we're all the way back up on the IWM, back up towards the highs that we made back here in September. Again, as long as we can hold above, call it this 86, 84 level, I think we're in good shape. Even if we pull back in a little bit, we still are in good shape because this is a nice little bar in the location of this pattern that's setting up right now for possible continuation breakout. Looks pretty good, and especially with the market conditions that we've had the past couple weeks here. This is actually shaping up pretty decent, holding pretty well. Taking a look at the daily chart, the reference level you want to work off on the IWM on the daily chart, okay, is going to be coming in around here. Let me take off all these charts. I got to clean these charts up. Take a look here. You can see this 86 level to work off of from the gap. If we come back down here, you're going to be looking at this 84.29 as being the gap fill level. All right, the high that we made on Friday on the IWM was 87.44. Pretty sure you're going to have some buy orders come in for some momentum type of scalp trades earlier in the week if we do break above, say, 87.50 or so. All right, it's going to take a look at the dollar index, dollar futures index. Dollars been showing some strength along with the market. We did have some selling pressure on Friday, but we're seeing a little bit of a different correlation with the dollar actually picking up some strength with the market. That's pretty interesting. We're going to see if something changes or if this is going to continue to remain the pattern. As we all know, whenever the dollar has been showing strength, the markets have had trouble making a move higher. So we'll see how that plays out. Dollar right now is at resistance around this 81 level on the dollar futures chart. I'm just going to take a look at the daily chart with that for you guys on the dollar futures here. So let's take a look at the euro dollar. You guys know I've been tracking the euro dollar. Actually had some standout calls on the US dollar throughout last year. All right, and now we're going to be looking at the euro dollar again. Sorry, not US dollar, euro dollar again to see what it's doing. It looks like it hit some resistance level that I have right here from my channel. Been trapping some longs up here above that key trend line. Had some selling pressure, and now got a bounce on Friday. We'll see how this plays out. Looks like it may need to pull back in a little bit more, but right now it's holding some support around the 130 half level on the euro dollar. All right. Let's take a look at crude oil. Let's take a look at the commodities now. Starting off with crude oil. Crude oil has been showing some nice gains here. All right, we did mention the fact that on the monthly chart of crude oil, we had this nice little big triangle pennant pattern going on here, and this is kind of telling me we could be expecting a big move in crude oil sometime this year. All right, and then we take a look at right now the next resistance level is around the $100 barrel level. We come right back down. We will have some support around the 86.41 level. Let's take a look at the weekly chart, and on the weekly chart, which I've been highlighting in my previous videos as well. All right, we were looking for that move up. The big triangle that you see on the monthly chart is this upper line right here. But on the weekly chart, you can actually draw a shorter term momentum line. All right, and about 2 weeks ago, we said that was going to be our target when we were, say, around the $90 level here. And now you can see we hit that 93, 94, close to that 94 level, which was our target. Actually, we did hit a high. No, we hit 93.87 high this week on crude oil. So weekly chart looks pretty good. We're at some resistance right here from the trend line, but the real resistance from the price action isn't up here till, say, around the 97.5, 98.66 level. So if we do get some momentum in the coming weeks, we could definitely see this crude oil continue to rise higher. Let's take a look at the daily chart. Daily chart, we still see that we have some congestion resistance from this little price band congestion right here around the 94 to 98 level. If we get above 94, we'll see if that volume picks up, see if some momentum buys start to come back in crude oil. As basically everybody that was long crude oil, they were still holding crude oil contracts or USO contracts. They're about to be back at break even from this little sell-off that came right here from this little consolidation that trapped all these buyers up here. So therefore, if they expect crude oil to continue going higher, they're not going to sell their trade to break even. They're going to continue to hold the crude oil, maybe even add to it if we get above 94 and the price action is bullish, warrant the market conditions. But if the market looks like it's going to start rolling over, and you're looking to get short crude, this can also be a relevant area to catch a possible pullback before they try to make a move higher. But it is in a nice little short-term uptrend right now, and looks pretty good on the weekly and the monthly chart. So make sure you keep an eye on that sector right there. Let's take a look at gold via the gold futures. All right, it's pretty interesting because gold futures did exactly what we said was going to be a possible scenario. And I like to preach always having scenarios in your scenario book for whatever symbol, index, equity, ETFs, whatever you're looking at, currency. All right, and the scenario that we mentioned on the gold futures was the fact that gold's popping up right now, but it could definitely come back down towards this key trend line we have from the channel level, all right, or from this trend line that we had highlighted from back here, the key relevant inflection points while we drew this trend line in. All right, and we did come back here on Friday after some sell-off in the gold and recheck the level, but you can see they bought it right back up. If you take a look at the 60-minute action on that, or better yet, the 30-minute action on that, you can see what happened there. Nice little sell-off that came right back in, buys around 1630, brought it right back up. So nice volatile action in the gold sector. If you're really looking for some volatility, there's definitely some volatility in the gold sector. So that's pretty interesting. Let's take a look at the weekly chart now. Weekly chart, again, sitting right on top of our consolidation area. I am expecting a bounce. We could maybe chop around a little bit more here and try to carve in the higher base. But after all this consolidation right here, on any normal setup, this usually breaks out like it did, comes back tests a level, see if buyers step in. If buyers step in and we hold some nice little relevant level around the 1650 level, we're going to be looking for a move higher. Another momentum trend line you could draw in for the future to watch for the near term, short term, is around here from connecting those highs right here, and you can see we have a possible little downward channel that's in play right here on the weekly chart. I'm actually going to draw that in right now, so I don't forget to do that. Connect this trend line, duplicate it, and we have a nice little downward bullish channel that is setting up right now. And you can see those buyers came in and respected that level right down there. They picked up some cheap gold prices around the 1620 level. All right, take a look at the monthly chart. Pretty much sideways still. Nothing really going on there. All right, let's take a look at the gold miners, GDX. GDX has been trying to break back inside this key channel line that I showed you guys from before. Okay, from this little breakdown that we had, from this little consolidation that we were setting up for a move higher. All right, let me take off these studies so you guys can see a little bit what I'm trying to show you here. If you've been tuning into the previous weekly videos or the previous videos I've been doing for the past couple weeks to months, you would know how we were watching this GDX form. And you can see right here, you can see basically, sound check. You can see right here, we had the GDX try to break back inside the channel, gapped up, try to break back inside the channel, then came right back in. So we're going to see how that sets up. And again, if we can really hold above this little key area right here, then I'll start looking for that nice little push up in the GDX to come back and try to fill in some of this little channel range that was trading right now. But as you can see, this at an angle, of course, this is the same setup that you have when you have a nice little horizontal range, all right, that breaks down, basically trades sideways below that broken range. Sorry about that. Trades sideways below that broken range there, and it's trying to break back in, but it can't. Same scenario that you're looking at right here, just at an angle. All right, that's what you have set up right there on the GDX. Take a look at the weekly chart. Steady downtrend that we've been in since the September highs. Take a look at the monthly chart. Really coming back into some possible support area from this moving average, from some of these key support levels down here around the 43.50 level or so. All right, let's take a look at the SLV, because I know some of you guys at home also trade the SLV when you're trading the precious metals. And SLV broke below that little 29 support that was building, the past couple weeks there, and now we're back above it. So possible trap action, possible bear trap action right here on the SLV. We definitely want to make sure we pay close attention to these precious metals in the early week here coming up. All right, let's take a look at copper. All right, Copper futures are looking pretty good as well. Copper has been showing some nice strength, as you can see here. Same thing that I try to show you guys when I highlight these different areas with the yellow shaded band. Usually, when I have a yellow shaded band on my charts, that usually means it's a congestion area. Congestion in the sense of there's a lot of price action trading within the area. And it's important to mark that on your chart. So you can see here we were trading in this little range. We broke out of this little consolidation range back here in early September, rallied up, tried to form a little bull flag. That bull flag failed. You go back to our previous videos. We mentioned that. And then we came right back into the range, trapped some people that were possibly looking to get short. All right, those copper futures or copper popped right back above that key level, rallied up, back tested, and now we're back up. So you can see how having these key inflection levels on your charts, making sure you watch them, keeping them on your screen, keeping the annotations on the charts could definitely help you improve your trading. And that's really what you want to make sure you're doing on your daily analysis when you're marking up your charts. And if it's a trailing line that's irrelevant because it's traded back and it's traded above and below that key trend line a couple numerous times, then you can take it out. But if it's still acting relevant, you want to make sure you keep it in. All right. Let's go ahead and take a look at the volatility index via the VIX. VIX, same thing, guys. Every time volatility just spikes up, this thing just gets demolished. I don't really ever trade off the volatility, but I do use it as a gauge. You can see here the volatility index is right back down at this key 1356 level. As you guys know, we did call the breakout in the volatility index right here. Did mention the fact that every time volatility pops up, they sell it. Every time it pops up, they sell it. Every time it pops up, they sell it. Look at that, guys. So if we break back below this 1356 level and break below 13, all right, we can see the VIX continue to move lower. And again, I do not use this as a trading holy grail indicator, but I do use it just to kind of measure the type of price action that we're getting in the market and kind of the sentiment in the market by a little bit, So anyways, that's about it as far as the indices go. Let's go and take a look at a couple of key stocks and sectors. OIH sector, the oil drills sector is shaping up pretty well. You have RIG, DO, NE, OII, all those stocks are moving to the top. So I will take a look at a couple of those stocks. But OIH is looking pretty good, back above this key little 39 level that we had from this little breakdown. All right, and you can see now we got a couple of consecutive closes above that key level. Next resistance on the OIH is around this 42 level. Let's take a look at the weekly chart real quick. Nice little engulfing on the weekly. Taking a look at the monthly. And the monthly chart, nice little pop-up on the monthly chart from the prior months there. All right, so stocks in the OIH, RIG, this one has been on fire ever since they came out with that settlement news. I would definitely, for sure, wait for this thing to pull back. Don't get caught on the hype up here. Wait for it to pull back, but definitely keep an eye on this stock. You can take a look at Halliburton, which I like to call Halle Berry. And this one's looking pretty good, too. A little bit more of a slower mover than RIG, but this thing could heat up. Nice little expansion bar right here. Nice little downward channel that's set up for a nice little breakout. And now you got that 3-bar continuation. But be careful because, again, this one has had 4 consecutive higher closes in a row. All right, so this one may need to consolidate a bit or pull back a bit as well. Casinos are looking pretty good. I put on my Facebook page the other day that I like this LVS trade. And I really like trades like this, even when these patterns form intraday. They're just high probability trades because you have this nice little base that's getting worked out. All right, and then you have this nice little volume that starts to come back in, showing you there's some commitment, some conviction in the trade, and there you go. All right, it's continuing higher. Now, even this one may need to come back and pull in again because, again, 4 days up in a row. However, momentum comes into the market. Some of these stocks that are up 4 days in a row, those momentum traders are going to come in those stocks and push them higher. So keep that in mind. But the whole casino sector looks pretty good. LVS, WIN, MGM, these look pretty good. MGM is going to be coming into some resistance around this $13 level there. So be wary of that right there as well. What else here? Some of these other stocks I'm taking a look at. SNDK. SNDK looks like it's shaping up. If it gets over 46, it could have a nice move up. I like this semiconductor sector a little bit. I say a little bit because not all of the stocks are setting up. However, if you take a look at the semiconductor index, the SOX, you can see here we're back above this range and back inside this little consolidation that we broke down out of, when we had this little market weakness coming in here, had a little breakdown, had a little back test, and had the sell-off, and now, we're back inside this little range. So we may consolidate a bit up here, but if we continue to hold above this 390 level on the SOX and these moving averages continue to curve up here, we're going to be looking for the SOX to start making its way back up towards the top of the range here. And one thing that I want to show you guys in the semiconductor sector is take a look at this sucker we have right here. Look at this, guys. Nice little triangle pattern shaping up, pennant pattern, whatever you guys want to call it, on the semiconductors, on the SOX. This thing could break above this 410, 411 area, call it, on the SOX. All right, and it shows some good conviction, some good volume. This is going to be pretty good. You want to make sure you're watching the semiconductor sector. Monthly chart looks a little more sideways, but we could be moving out this range. 2 consecutive prior up months in a row here. 2 consecutive higher closes. All right. What else are we looking at? Caterpillar looks pretty good. The whole equipment sector or growth sector or industrial sector, you could say those stocks, mining equipment sector, Caterpillar looks pretty good. Joe White Global daily looks good. They look pretty good. Some of these you want to make sure you obviously take a look at the monthly and the weekly. I did take a look at the monthly and the weekly on all of them, but I don't want to make the video too long to go through all those weekly and monthly charts with you all. So just keep those in mind. One weak stock that I see, I don't really see many weak stocks out there. I just haven't been looking for them because I'm trading with the market conditions we have, which if that's what you're doing, you should be really looking for strong stocks that are pulling back, or strong stocks holding higher bases, or some nice stocks that are trending pretty strong if you're a momentum trader. But one weak stock that I see out there is UNH. If you take a look at UNH, nice bearish wide range candle, inside candle on the lower 50% there, close on the lows. Look for this one to make a continued move higher. Continued move lower for a break below 51.85 and probably head towards that 51 and 50 target level down there. So only weak stock I have for you guys on the radar right there. I do want to go over a couple more stocks here. Bear with me. Lennar looks pretty good. I like the weekly chart on this. Look at this thing right here. Lennar breaking out this nice little consolidation that has been in for the past, 3 months or so here. All right, nice little range, 36.31. All right, nice consolidation. This is what I like to see. Now, the longer we can hold above this level right here, a little resistance level that we broke above, call it 39.25 or so. We're going to be looking for some continuation in this Lennar. You can see the monthly chart, nice, slow move higher, pretty good. And the daily chart, looks like it's going to be setting up here. As long as it can hold this 39.53 level, these moving averages continue to curve up, you can look for this thing to make a move higher. Be careful, though. They have earnings, not next week, but they have earnings right here on January the 15th, which is the following week. So that's about it, guys. I'll catch you guys later on. Make sure you follow us on Stock Twits, Twitter, all the good stuff. Make sure you check out our website, wallstreettrading.com. All right, have a lot of good stuff coming to you guys on the blog. Make sure you stay tuned on that. And that's about it, guys. Join us tonight at 9:30 p.m. for our live chart session tonight at 9:30 p.m. in our trading room. You can go to mywallstreettv.com, type in the password SMART. Have a great one, guys. Cheers.